Welcome to the Mainsail Financial Group podcast series, where we host industry experts and local professionals to share some insights into areas that we don't really get a chance to focus on day to day. Today, we want to thank Taylor Olson actually for joining us again. I think it's been almost exactly a year. So I want to thank you for joining us to kind of talk again a little bit about the commercial real estate market, some trends you're seeing in the area. As a quick reminder, Taylor's a broker with Colliers International. It's a full-service commercial real estate firm. His team focuses exclusively, I think, actually on representing tenants, correct?
Yep,
Okay.
You got it.
Perfect. They have a 5-person team and, really pride themselves on kind of a boutique service with the international resources from the firm behind them. Taylor's been in the business since about 2012, and I think in the past 12 months or so, done about 3 million square feet and 117 transactions. Is that about right?
That sounds about right. I the numbers aren't exactly
Sure.
dialed in right now, but yeah, leasing, sales, that sounds about right. And thanks for the introduction.
Yeah, of course. Yeah, and happy to have you because, I think one of the important things is that, in working with you too, is that you guys take like a very consultative approach to helping tenants through all this, similar to how we help our clients as well. And so, it's been really helpful and informative, I think, to have you join in the past. So appreciate you coming on.
Yep, absolutely. Thanks for having me.
Yeah, of course. And yeah, I think the timing is perfect. Again, it's been almost exactly a year, I think, since we did this last time. And here we are, 4 or 5 months into the COVID-19 world. There's a lot of talk of, obviously a lot of people working from home. There's even some talk of some of the tech companies maybe permanently being, work from home for some of their staff. And so I think it's a great time to kind of pick your brain a little bit and see what you're seeing and what you expect, potentially on the flip side of this.
Absolutely. Yeah. I mean,
so maybe
just from my background, I'm doing this over Zoom from home, and I can tell that you're in your office that we negotiated a couple of years ago. So it's already the differences are there just in the year. So
yeah, it's been a wild 2020, that's for sure. And I think maybe we'll start right there. So just kind of a general kind of starting point, I guess, is with all of what we've seen this year. How have you seen this affecting the commercial real estate market, just in general?
Yeah, it's a great question, and to be honest, I don't know if anyone has a definitive answer to that right now. Right? I think the main part of my job, once this really started impacting us here in the United States, say late February, early March, I've just had so many calls about, okay, what can we do about our existing lease obligation? And then that conversation is now shifted to what are we going to do with our space going forward? What changes are we going to make that a more usable space and really get the most out of it? And what, maybe internal business kind of policy changes are we going to implement to make the office space more functional and safer for employees to come back, both kind of short term once this is, while we're still living in this COVID situation, and then also long term, what are we going to, really change and adapt to make a better change long term?
Okay. So it's pretty tough to say just based on what we've seen so far.
Right. I think it just varies so greatly, right? I mean, we have clients of ours that are already back in their space on some capacity. We're seeing a ton of discussion around, limiting the density in space, whether that is kind of go throw back to high school days when you have A and B days, right? So they separate the teams, and you have an A day for that team and a B day for other teams. And, say if you're a company with 50, 60 folks, maybe it's 25 to 30 folks are in that A schedule and 25 to 30 folks are in that B schedule. And you go Monday, Wednesday for the A group and Tuesday, Thursday for the B block. And then Friday's kind of a work from home, just while, we're living in the kind of the heat of this COVID thing. That's a solution, a workaround that a lot of people are doing that are still going into the office and actually need to go into the office.
Yeah, that's interesting. I've heard a few firms that are doing that scheduling, switching off like that as well. Yeah. Have you seen any pockets where maybe this is getting hurt more or less, I guess, in the area here?
Do you mean in terms of kind of just the tenant side of things, the occupancy side of things, or just more segmented in terms of the different types of commercial real estate? Because I guess. Sorry,
I was going to say more of the tenant side, probably.
Yeah, tenant side. So we're in an interesting in market up here. Obviously, in the Pacific Northwest, we're so heavily dominated by tech, right? Which a lot of the companies up here that allows you to work from home a little bit longer and be a little bit more cautious. So we're definitely seeing a majority of our clients who are on the tech side of things are able to work from home, are able to be kind of a they were an early adapter in the work from home policy when this really was starting, and now they're not going to be a first mover back to the office either, and unless they're doing work that was deemed essential or really need to get back in. But I would say that for the most part, this market it has been, for whatever reason, it's been easier for them to adapt to the work from home just because of the functions in place and the nature of what this market really thrives on.
Sure. Okay. How about location wise? Anything different between like Seattle and Bellevue or anything like that?
I would say the biggest difference really is in the two markets in kind of where the vacancy and subleasing gone. Just trends of our head of research. We track this. I'd say third week of March or April, we kind of saw that, hey, there could be some sublease coming down the pipeline and would kind of create a gluttony of space coming to the market. The east side has been around 5% vacancy pre-COVID. We're at 5.2% vacancy through our latest numbers, which Q2 just came out a couple of weeks back through our head of research. We looked at the different geographic submarkets within the east side, and we were tracking all the sublease space, and really across the board, with the exception of the Bellevue CBD, none of the submarkets have increased in sublease space. Seattle, completely different story. There's a huge amount of sublease space that has gone on the market. And we also work with our San Francisco Bay Area team a lot just because of the synergies between the two markets. And they've seen a significant increase in sublease space as well. Just for whatever reason, we're just not seeing that on the east side as of yet. So we're still sitting at about a 5% vacancy rate. I really don't have an explanation for that other than some of these groups are just yet to start marketing a space for sublease or are continuing to kind of wait to see how that plays out.
That's really interesting. That may give me a little hint into where I wanted to go next, but with that and what we've seen so far, have you seen any issues with tenants paying rents or landlords being able to collect at all?
Yeah, I've heard of that. I think the retail sector, which I don't really work in day in and day out, I've heard has struggled a little bit more. Office, I know that there's been an increase in tenants not being able to pay rent, but I don't think those numbers, and I don't have the data on this. This is just from what I'm hearing, and I'm asking folks out in the market, other landlord brokers, other ownership groups. There hasn't been this widespread inability to pay rent. I know that for my clients specifically during the month of April and May, there were several talks around, hey, we're just not even allowed really to go into our space. How can we kind of, create a solution where we can get some rent relief or abatement of rent. And that was probably took up a bulk of my time during that April, May period. And you see in the news all the time of people, not being able to pay rent or force majeure. And I think that kind of created this conversation that was a huge buzzword in our market for everyone to talk about what was going on. And really just the lease contracts that people sign. And I've looked even in your guys' main sale lease, there's no out for rental payments through force majeure. It's very unlikely that happens, but across the board, it was just, we went case by case. We had conversations with the landlord and we could, we tried to see if we could work anything out, whether that was, you abate rent for a 2-month period and we kind of amortize that over the rest of the lease life, or we just add 2 months of term. And in some cases, landlords are really willing to work with us. You kind of have that relationship with your landlord where they want you to succeed as well. So I would say, a few dozen conversations we had, maybe a quarter of those, we actually went forward with really requesting that from the landlord. And I'd say half of those, we worked some sort of, creative solution to where we could get the benefit of not paying a full rent for that month and just delaying that cost to a later date, which is really helpful. And it was great to work with some of the landlords on behalf of our clients, just to see if that was a solution, because, everyone was really, strapped for cash during that period and not knowing how long this is going on, and still really doesn't know how long this will go on. So it was definitely, like you said at the start, it was an interesting time and definitely new challenges. I don't think anyone has dealt with this obviously before, whether, you've been in the business for 8 years like I have, or, 40 years. I don't think this is a new situation. We're all kind of learning through this together.
Sure. Yeah. Yeah. It's nice to hear that, you have a good point that the landlord obviously would want the tenant to succeed as well. So it's good to hear that from both sides there, you're finding people are willing and trying to work together when they find themselves in that situation.
Totally. And that goes for, local real estate groups that are kind of family owned, and also the larger real estate trusts, that have, they have to answer to shareholders. I mean, everyone was trying to kind of work together in this, which was, I guess, a silver lining that, sometimes these disasters bring about the best of everyone. I think a lot of people were trying to work together to accommodate, at least in our experience with the clients that we really dealt with this on a major scale.
Sure. That's great. I'm going to switch gears a little bit here, and I know that this isn't necessarily your area, so bear with me a little bit, and if we need to punt it, that's okay. But I was just curious, maybe on a high level, because you focus mostly on office space, but I was
Correct.
curious in the commercial real estate world, so warehouses, office space, like all these different pockets. If you've seen that some areas may have been hit harder or some not impacted at all. I don't know if you can speak to that.
Yeah, just on a general basis, I would say kind of industrial flex has really taken off. This was already a really hot market for that with Amazon being here, but I think with everyone kind of shifting to e-commerce, and there's so much online shopping and purchasing power that's gone over the last few months, just because brick and mortar is, you've really been unable to access that, has really taken off. I don't think there was any really slowdown or any noticeable blip in industrial, if not an uptick. So just high level, that has really done well, especially here in the Puget Sound. Retail obviously has struggled. I think that it's no surprise to anyone that that's probably the one sector that's got killed the most. I'm sure you're missing going to your favorite restaurants or bars that are around your house. Same with me. A lot of those retailers and food restaurants are just, it's tough for them to operate. They already are on such small margins anyways, that a full shutdown of a month is just something that's really challenging to overcome. So retail as a whole is definitely very quiet right now. There's not a lot of new retail business coming in. A lot of retailers are still trying to struggle through their lease, and what can a landlord do and not in terms of evictions with what's going on with the governor. I think that's probably the most impacted segment. Multifamily, I think, has kind of stayed steady. Housing is essential. Everyone has kind of just status quo there. I'd say the investment side is really quieted down too. Lending is really challenging, even if you're doing kind of an owner user. So some of our groups that we're working with right now are kind of, instead of maybe looking to lease, maybe looking to own their own building. Lending now requirements are maybe a little bit higher than they were in the past in terms of what the amount of money you have to put down. So I'd say across the board, everyone was impacted, right? Even the technology tenants that I have, or the other, that are in this region, their clients are some of those same retailers that are impacted. So everyone's purchasing power was reduced. So everyone was impacted one way or the other, whether it's, kind of that first layer of impact or second, third.
Interesting. Yeah, I apologize, and I appreciate you kind of running with that there. I know that those areas aren't necessarily your daily focus, but I think that's interesting, just on a high level, to get a sense of what's going on out there.
Absolutely.
Coming back to your world, so one of the other things that I think has come up a lot is TIs, tenant improvements, through all this. Have you been working a lot with some of your clients on, I don't know, spreading things out? I mean, have you seen a lot of TIs come out of this? And if so, what have you seen mostly?
So, and we talked a little bit about this before we jumped on. There's not a ton of new deals, and not a lot of relocation deals where you would in fact get that tenant improvement allowance. A lot of the work that's still active right now that I'm doing are kind of renewals or just short-term renewals, a year or 2 years if the landlord will allow it. We're not really seeing a ton of new deals, which in turn are a majority of the TI work, right? So I don't have enough data to really speak on that confidently, but I would say that the few deals that we are doing, I would say TI is probably, with the exception of one, it's a bigger client, really good credit, longer term deal. The TI dollars, I think landlords are a little bit more hesitant to spend cash to get a deal. They'd rather just kind of as placed, keep things as is for 2 years, 3 years, short term, and then reassess everything down the line.
Okay, that makes sense. Another thing that I wanted to make sure to bring up is last time we spoke last year, we had talked a lot about the kind of office sharing
Right.
that are out there. What have you seen in those arenas in the past few months?
Yeah, I mean, really challenging, right? I think that if you were in a WeWork or in a Regus or something similar on a month-to-month basis, you probably terminated that contract a while ago, right? You're not going to go back into a month-to-month co-working contract until you can confidently go back into the office. On the flip side, I told you this offline as well. I probably have half a dozen or so clients that have a lease expiration that is coming due Q4, Q1 of 21, Q2 of 21, Q3 of 21 that are saying, hey, I don't know if we want to renew our lease for 3 or 5 years or 7 years per option, but we still want a physical space. We still need a segment of our team to interact daily. Can we look at a team room at WeWork with maybe some internal conference rooms? So I'm looking at WeWork for several clients right now on, say, anywhere from 10 to 60 people team rooms, just for 12-month, 18-month commitments, just to kind of weather the storm and get past this initial concern with COVID. I think people are somewhat confident that in 12 months and 18 months, there may be a vaccine. We may have a better handle on this and people will feel more safe going back to the office and getting back to their daily routines. But I don't think people want to make that 5-year commitment at this moment in time right now, but a 12-month commitment, I think people are willing to work with that. So you might lose some of that business in co-working, but then there's another kind of different segment of the market that may value that co-working aspect, the short-term nature of what they offer. So, I would love to look at what their numbers are across the board. I know in this market, specifically on the east side, the downtown WeWorks are fully leased. They opened a new one that is along I-90 that kind of opened the back end of last year. And I think that one's struggling to fill up just because people, aren't wanting to jump into office space obligations right at this very moment. But that'd be interesting to see. But I kind of think there's some give and take there. But I definitely think it's not going to be as big of a trend. I think some are kind of shrinking, contracting as this kind of further develops.
Huh. That's interesting. But it sounds like so far anyways, I mean, yeah, some people are leaving, but you're seeing some of the guys that were more traditional office space filling that void, it sounds like, huh?
Yes, but I don't want to say that's kind of a one-for-one, because I will say that there's a lot of smaller boutique, non-WeWorks, non-Reguses that jumped into this co-working space because that need was there. I don't think that need is as great as it once was, and a lot of those are not doing as well. They're kind of shuttering doors at other spaces, other similar type co-working spaces that a year ago were they were popping up everywhere. There was all sorts of different options.
Yeah.
I just think that has kind of consolidated a bit.
Huh. Interesting. I want to maybe move from the present to looking at what may be ahead, if that's all right. So one of the things that we're really keeping a close eye on with all this stimulus, all this asset purchasing that the Fed's doing, there's a very large potential for inflation in the years ahead, I think. And so I was just kind of curious, if that does pick up, how does that impact your business? What do you see in those inflationary environments, in the commercial real estate world?
Yeah, I mean, that's tough, right? Because it probably impacts different market segments completely differently. It'll impact investment differently than it'll impact retail and whatnot. I would say for my world, I'm not exactly sure, right? I think that lending is very cheap now. I think it will have to remain cheap for some time. So, maybe people that were already kind of in line to build will go, but I'm just not sure exactly how that directly impacts, the typical, what are your rates, what are your TIs, what are your concession package for the office market? I think that's driven a little bit more by just kind of simple supply and demand. So I'm not really sure exactly what's going to happen with with that. And I know that you brought that up in terms of you think that the inflation could really kick in here in the next couple of years. I'm not exactly sure what's going to be the result of that.
Okay, interesting. Yeah, I guess so. So what you've seen in the past is that, that supply and demand, which is really, driven obviously by the businesses locally,
right?
Is really the more important factor, as opposed to, what money costs and what all that looks like.
I would, yeah, I agree with that. I think when you're talking about, okay, what kind of rate can I get? What is my TI package? What is my concession package going to be? That is just driven on how many spaces are out there that I could fit into, right? And
Yeah.
Seattle and the East Side, the Puget Sound in general, has been traditionally not a very big market in terms of the pre-lease commitments. A lot of, if you build it, they will come type commitments. And once the space is there and the building's up and tangible and you can see it and occupy, the occupancy date is coming, or someone is able to occupy date is coming. And then you get those leases from the bigger players. Right now, there's no new development in Bellevue that has started that's not already accounted for.
Mm-hmm.
So I think that, we're sitting here on the East Side at, right over 5% vacancy. And the soonest another building can come downtown is probably 24 to 30 months out. So, without these shifts in large blocks of space, there's just, I don't see a ton of movement in kind of the rates or concessions of where things are from right now.
Interesting. Okay. And I think, that might be kind of a good place to start wrapping up here. But before we do, I want to maybe just make sure that is there anything else that you can think of, or any, key takeaways that you might suggest for our audience here that would be helpful we haven't touched on yet?
I would just say a lot of the conversations that we're having right now with our clients are on kind of a three-phased, back to the office, right? So, people are gearing up for a Q3, Q4 return to the office for their employees. What does that initial, first few weeks look like, right? What policies are you adapting? And then we talked a little bit about that earlier, just with the A and B days. Simple things like, I've been into our office and you see the signage and we're trying to have, the one way, similar to like a grocery store. Mm-hmm. Everyone's going the same way, so you don't have the normal amount of interactions that you have. But then, what are we going to take from, those first few weeks and have that be kind of more of a longer term, say the next 12 months, as we're kind of living in this COVID environment. What are we going to adapt and change that sticks around for a little bit? And then beyond that, what are we going to change? And some of that stuff is office space, right? Some clients are thinking, okay, maybe we reduce our footprint. We don't need as many people. We can adapt a larger work from home policy. Some people are asking for more space because they need everyone on site at the office, but they want to accommodate for social distancing. So maybe the density ratios that some of these tech companies had in the past, 110 feet per square person are kind of bumped up a little bit. So I think there's kind of a give or take there. And then a lot of the things we're talking about too are just internal office policy changes. People's work from home should be more flexible on a permanent basis, kind of paid sick leave, or even just in general. I don't know how many times the culture in this country is, hey, if you're sick, you come in and work. I think that is something that everyone kind of now is looking back seems silly, right? If you're sick, let's just stay home. We don't need to get everyone else sick. This is kind of a trial for work from home for a lot of people. Mm-hmm. So I think that some of these policies, combined with some of the, maybe restructuring of how you use office space, are gonna be the things that people look at, on an immediate, first couple weeks to a kind of midterm, next 6 to 12 months to a long term. What are we going to change here that will take in with us for the next 5-10 years? Sure.
Okay. That's great. This has been super helpful. So again, I appreciate your time and joining us today. I think perfect time to have you on for sure. This is all really good stuff. So
yeah, absolutely. Thanks for having me again. Appreciate it.
Yeah. And if anybody does have any questions or wants to reach out to you, can you remind me how they can get in contact with you?
Yeah, I think email is probably the best. It's just taylor.olson@colliers.com. So that's my first and last name, taylor.olson@colliers.com, colliers.com.
All right. Awesome. Well, thanks again for joining us. And thank you all for listening. If you do have any questions for us, as always, you can email us directly at info@mainsailefg.com. That's info@mainsailefg.com. Thanks again, Taylor, for joining us, and have a good day.
You got it. You as well.